Welcome to 5 and 5 with Miller and Mango, your go-to source for all things finance with a twist of culture infused into every episode. Join your hosts, seasoned financial professional Miller and marketing maverick Mango, as they discuss 5 of the latest market and cultural trends and help you instill common sense into the ever-changing landscape of finance, all within 5 minutes. It's time to dive into the numbers, unravel market mysteries, and discover the strategies that matter. Welcome to 5 and 5 with Miller and Mango.
Hello and welcome back to 5 and 5 with Miller and Mango. I'm your host, Mike Manganilla, with my co-host, Miller Hoffman. Miller, how's it going?
We are well. It is almost May. I can't believe it, but here we are, and excited to get today kicked off. Tell me what's on the docket, Mango.
Let's roll right into it. Recently, the U.S. dollar index closed at $106.26, the highest level since November. Since that means the U.S. dollar is strengthening, what does that actually mean for the average Joe?
Yeah, it seems like one of those two ideas that are mutually exclusive, right? We're still in a pretty high inflation environment, although we've seen that rate come down a bit. But remember, inflation is a rate of change. That box of Cheez-Its isn't magically going to be $2 anytime soon. So it's just naturally going to build on top of itself week after week, year after year. But we also are seeing a really strong dollar at the same time. So your US dollar going farther abroad. But even for those of you who aren't planning to travel much, you don't have an exciting European or a Mexican vacation planned for the summer, it still impacts you based on the trading and the importing that we do from a lot of these countries. Obviously, Mexico and China are some of the two main players that we take imports from. So your dollar is going a little bit longer than it has in the past. Mango, I think this is a continuation of a reflection of the strength of the U.S. economy. We have continually seen people predict recessions or slowdowns or the U.S. really taking a cool-off period, but knock on wood, we haven't seen that really impact so far this year and certainly not last year. Anything can happen, of course, and we wait cautiously, but optimistically. I think that's a reflection of kind of where we are in U.S. economy-wise. Curious to know what you think, though, or get your take.
Yeah, I think the interesting thing for me was that when I did actually travel abroad when I was younger, we'll say 20 plus years ago, and it was always at the strength of the dollar, and I think it was always 2 to 1 back in the day was the common currency when it came going to overseas. So, for me, it's always been, stay the course, don't make any drastic actions, save where you can. Everything right to chip. So that's what I'm going to continue to do.
Sure. I think that's a good plan. What's next?
What is not ready to chip actually recently is Tesla. Tesla's been in the news recently as their stock continues to stumble. Over the last week or two, I'd say it's lost a big portion of money to that stock price. Should people that own Tesla, which is a lot of people, be concerned?
Yeah, Mango, I think Tesla is one of these almost cult stocks at this point. You have a couple really diehard, or definitely a faction that is really diehard and a really big believer in Musk and the innovation just that he brings to the table. Stumble is too friendly of a term. If you asked me, Tesla is down almost 40% just this year. You bought Tesla at $100, let's say, easy math, it's down $40, and you're looking at $60 per share right now. Now, that's an example. The share price is different, but compare that with the general American markets that are actually positive, right around 6% or so to start the year, which is a good start for us. We've had a rough April here so far, much more volatility on the downside than we've seen in the first 3 months of the year, but this is a continuation of some of the ebbs and flows of Tesla, right? It's one of the most valuable, if not the most, actually, Mango. It's the most valuable car company on the face of the planet, and it's not just by a small margin. The next closest is Toyota, which is worth on paper right around $300 billion. Tesla is worth about $470 billion. So it's not a rounding error here, folks. Wall Street loves Tesla. they're thinking some of this innovation and new technology can really make a considerable difference over time. I mean, it's very clear to see the numbers, but maybe more bumps in the road for Tesla. Maybe that's part of being innovative and willingness to try new things. But what do you think about Tesla, Mango? Any thoughts?
I don't know. Maybe Elon's spending too much time in the Twitter X world and not concentrating on his core business. Is what I'll leave it at
I
that.
think there's an argument to be made there. He does seem quick to focus on other things, but a lot of time and effort into SpaceX. I mean, X,
Yeah, it's
Tesla.
also, I guess, my concern would be just the future of EV. The future of kind of powered vehicles in general, the energy grid versus gas energy. I mean, there's underlying factors that might be playing into it, and I don't want to overthink any of it. But I wouldn't be surprised if you see some, windfall from that as well.
What's number three?
All right, one of our favorite months of the year is April because it's a TradeWinds. We're really big about financial literacy, and this is Financial Literacy Month. And Miller, you're one of the most people that I know that really care about this subject more than most. I would love for you to tell our listeners what is a influential book, a piece of advice for people to be more literate when it comes to their finances.
Mhm. I think the most, or probably some of the best advice I received was not from, a Wall Street firm or a professional. It came from mom and dad. And that's to live below your means. Defining what your means are can be really tough at times, right? You get that first job, or you get an influx of cash one way or another, and you decide how does that going to affect my lifestyle one way or another. But really being able to control what's not just coming in, what's coming out, I think is really where the difficulty comes from. I'm a big fan of financial literacy, and that doesn't mean you have to be Warren Buffett, right? But it does mean being literate in this day and age where society almost expects you to know how to buy a house, how to finance a car, how to go to college, how to pay your taxes. But society almost expects you to know that. Um, Mango, I think the actual implementation of some of this and the secondary school, middle school, high school level, I think that's where a lot of it's going to be really tough to translate. Our education system already seems so bogged down. Teachers are already so stressed out. This is just another curriculum, let's say, for them to teach. And I worry that students may not buy in as much as they should, as they may not see the big upside from it. So I love the idea. I love that from the top down here, Congress is looking to promote it or install April as the month for financial literacy. I just am curious to see how that actually happens in practice, if that makes any sense at all.
It does. And I would just add, if we do have listeners that don't feel like they either have the time or capabilities to be up to speed of what's going on, contact us at TradeWinds, because we have financial advisors that basically that's all we do is make you informed. We're there to support, educate, and empower everybody with their finances. So
Absolutely.
small
Well
plug
said.
for us.
Yeah, well said. Well said. What's number four?
Number four, your favorite artist, I heard, Taylor Swift. Correct me if I'm wrong, Miller. Just came out with an album this past week called The Torture Poets Department, which I will throw a hot take and say it's not great. So sorry for all the Swifties out there. It's a little too slow and repetitive for me. But I was kind of researching more about her album. I actually came across an article about the Swiftonomics. So the numbers that actually measure the impact that she has on the global economy. But I'm just going to go through some U.S. figures.
Go for
Are
it.
you ready for this?
I am ready. Lay it on me.
We got a couple here. She right now is currently on tour, the Eras Tour. It's the highest grossing tour on a record, over $1 billion so far,
Wow.
right? Per concert, she averages about 54,000 people, attendees. The average cost, beyond just tickets, let's go see tickets, foods, lodging, travel, per attendee, but people are spending to see her, are $1,327.74. That's beyond just ticket price. But the impact that she's having, not beyond just the cities, but the government, is she has obviously led to increased local hotel and employment into every city that she goes into. And she was in LA recently. And what I learned was so the LA County GDP increased about $320 million when she was there. And they had to hire an incremental 3,300 employees that earned about $160 million. Ready? And the last stat, the overall tour, they estimate has brought in around 5 to potentially $10 billion for the U.S. economy. Can you think of one other person or entity that has the ability to have that much impact on our U.S. economy? I can't.
No, from an entertainment perspective, I mean, I think you'd have to put Beyonce up there, maybe Michael Jackson way back when. I mean, just someone who could just command that landscape, right? When they release new work or they're going on tour, young, old, somewhere in the middle, like everyone knows the name, right? That's what my mind instantly jumps to. But my goodness, $5 to $10 billion in total impact. That's quite sizable. Good for
Yeah.
her and her team.
So I thought that was a good mix of culture and finances all in one. The good old Swiftonomics.
It sure is. What are we wrapping up with today?
All right, let's talk about the last segment. I'm explaining to me like a fourth grader. I kind of said I'm smarter than a fifth grader. No rights to that one. What is private equity, and should I invest in it?
Yeah, and the theme today is coming from Tim and I were at a conference earlier this week that was all about private equity. So it seems to be getting more and more popular. It's really been on a run here. It seems like the past decade plus, but it seems like it's really hitting retail consumers like myself and more individuals like ourselves, Mango, than just staying at the institutional level. From a definition perspective, private equity is a big umbrella term. It really includes any style of funding or investment that's not available on publicly traded markets. When I say publicly traded markets, I mean something like a stock you could buy on the New York Stock Exchange, like Apple or Microsoft, for example. These would be smaller, more private, as the name would suggest, private deals that aren't offered to the general public at large. They more so are looking for a particular style of investor and either tends to have a certain amount that they're willing to invest or a certain amount of period of time that they're able to lock the money up. Generally, longer the better. But private equity is really targeting more smaller and smaller businesses, which on the surface is great for the United States. The majority of people in this country work for smaller businesses. They run one themselves or they're an employee of one. And I would say TradeWinds is certainly included in that bucket, right? We are a small business on paper, but real estate is also a big component in that. Think of industries that need a large upfront capital in order to be successful. So, in order to buy a large warehouse or an office building, a hotel, let's say, a large upfront need for capital or money is definitely needed in order to be successful. Private equity as a whole has three main targets, which make it attractive to some investors. One, it has a higher return potential than maybe the general markets do. You're also taking risk to get that, but that's point number two. Private equity, in some points, has an opportunity to bring your overall risk portfolio or risk level, rather, much lower. As such, getting to point three, investors are typically looking for different types of investments that are not correlated with the general public markets. So Apple, Amazon, Tesla go up. Investors oftentimes are looking for investments that aren't really correlated with how well or how poorly the United States as a whole may be doing. So for those of you out there who have heard the phrase or maybe interested in putting money in, this can be risky business. It's not as regulated as public companies. Apple is required to report its earnings every quarter. It's non-negotiable. It's going to happen. They have to publish their financial statements publicly. We do not see those same requirements in the private equity space. I alluded to it before, and this would be my last point. Private equity sometimes requires some high initial investments. They're building money to give to other small business owners or investors, and they want to keep that money or keep their hands on it for typically longer amounts of time. So if you're looking for an investment, you can put money in and get it out next month. Private equity is probably not the route for you to go. And again, that's an umbrella term. There are so many different divisions that make up what does private equity actually mean. But I wanted to give you just a bit of a taste into what opportunities are out there and what you may see floating around the news here from time to time.
Good. So a little watch out. Watch out and be prepared.
Always be vigilant. I think that's good advice, no matter what the topic is.
Awesome. Well, we went from Taylor Swift to private equity. So that's a good way to close the episode. Everybody, again, thanks for listening. Continue to subscribe, comment, and share. Mil and I love doing this. And let us know if there's any topics you want us to cover. So this will close out April. Look forward to talking to everybody in May.
See you in May.
Take care.
TradeWinds LLC is an investment advisory firm that is registered with the Securities Exchange Commission. Registration does not imply a certain level of skill or training. TradeWinds will not accept trade offers online, and any such request, orders, or instructions that you send will not be accepted and will not be processed. This presentation has been provided for informational purposes only and is not intended as legal, tax, or investment advice or a recommendation of any particular security or strategy. The investment strategy and themes discussed herein may be unsuitable for investors depending on their specific investment objectives and financial situation. Information obtained from third-party sources is believed to be reliable, though its accuracy is not guaranteed. Opinions expressed in this commentary reflect subjective judgments of the author based on conditions at the time of the publication and are subject to change without notice. Past performance is not indicative of future results.